Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. And joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence. It's quite a rainy day in New York.
Morning. Yeah, I'm thankfully staying dry. I'm hiding in my basement. That's it.
Me too. All right, let's have a look at what Bitcoin's doing. The CoinDesk Bitcoin price XVX index currently trading at $62,405. Bitcoin is pretty flat, trading just down 0.6%. And the CoinDesk Ether price ETX index is at 41.89. ETH is making an advance of about 1.7%. And the new DFX CoinDesk's DeFi index is at $678. DeFi is jumping up over 7% over the past 24 hours. The most reliable reference prices since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, so, VanEck is the third ETF based on Bitcoin futures that is expected to be trading any time this week. Do you think that the demand from ETFs has basically been priced in already, Lawrence?
Oh, I think for now it has. I mean, definitely, we'll see how it goes over the next few weeks as these ETFs become more mature. We're getting all sorts of pricing distortions because there are limits to what these ETFs can hold. So and right now we're coming close to we have the expiry in October, and we're going to November contracts now, and they can only hold certain months.
Watch out for.
Yeah, and so you have that aspect to it, and that changes what the kind of returns you're going to get with the ETFs versus Bitcoin itself, and there are different ways in which people might invest in it. I think the interesting thing, though, at least for me, is actually that some of the steam has gotten out, and you're starting to see some investors looking at things like Solana. Solana is like kind of the next rally. It's down 1% today. And cheap, yeah. But I mean, when I'm looking at Solana right now, so it's up about 32% over the past 7 days. It hit a record 218.90s. About a year ago, it was about $1.69, $1.70. And it's now the number 6 market cap at 62 billion. So it's still on fire. And when we talk about DeFi, you got close to 14 billion in Solana locked right now. So I think investors are saying, okay, great. We've done what we can with the CTF trade. And if they're looking for quick hits, I think they're looking to other coins, other currencies. So it'll be
Solana's rise has
seen.
been incredible.
Yeah.
I remember, you could have bought it this year, around $20, and now it's much more than that. And there's just a lot of development, play to earn gaming, and just a lot of apps being
Sam
built.
Bankman-Fried's a happy man.
Yes, Sam Bankman-Fried.
SBF has it. Yeah, that's his. Yeah, he's obviously
Emily,
one of the.
What are you looking at? I know Sheev is up. That's an interesting meme.
always looking at Sheev. Yeah, I mean, it's just so funny how quickly crypto reorients itself. I mean, Bitcoin is still over $60,000. That's still kind of a huge deal in the grand scheme of things. And now everyone's just like, oh, this is a boring week for Bitcoin. But things are still. There's a lot of green on the charts. Solana, Sheev. So yeah, everything's still looking pretty good.
Awesome. All right, let's take a look at our global policy and regulation managing editor, Nick Day, who is also the editor of CoinDesk, the State of Crypto newsletter, who is going to give us an update on the latest on global policy and regulation. All right, Nick, so what are you looking at this morning?
Good morning. So, as you said, the VanEck Bitcoin Futures ETF is set to begin trading very shortly, actually at 9:30 a.m. Eastern today. So, in just a few moments, and we'll be seeing if there is still, the sustained interest in Bitcoin Futures ETFs. We saw quite, pretty high volumes last week when ProShares debuted, and Valkyrie had a fairly strong start as well. So, we'll see if investors are still looking at that. And, we're keeping an eye on Congress and seeing whether or not there is going to be a deal on the $3.5 trillion reconciliation bill, which may be a little bit, less spending now, but we're going to see if there's a deal on that. If there is, then there's a possibility that the infrastructure bill we paid attention through all of August might also be passed soon. And we're hearing that there may be a deal announced as soon as this week.
Hey,
Nick, when you say a deal, though, in terms of the crypto language, it's not changing, right? I mean, this is, as far as we know, all this contentious language is still totally in the infrastructure bill, correct?
Right. The infrastructure bill itself won't be changing. The deal in this case means, whether or not conservative Democrats and progressive Democrats can come to an agreement on the single party bill, the spending bill that they've been trying to push through since September.
So, Nick, I was going to ask you, you've heard of this thing called stablecoins? What's going on with them? Yeah, maybe.
Yeah, no.
Anything exciting?
We're hearing more and more rumors that the President's Working Group on Financial Markets is set to announce its stablecoin report soon, so to publish it soon, rather. Bloomberg reported last night that it may give the SEC a bit more authority over stablecoin regulation. And, when I was in DC last week, one of the things that I was told is that SEC Chair Gary Gensler was indeed reviewing the report. So, clearly it's on his radar. I don't know for sure if the report is actually saying, what we're hearing it's going to say, but for sure it's going to be directing a possible pathway for greater oversight and regulation of stablecoin by the U.S. government.
Have we heard from the stablecoin issuers at all? I mean, has anybody? They've been fairly quiet. I mean, they seem to just be pumping things, whatever it is that they pump, et cetera. But they haven't actually addressed this kind of looming cloud. And I'm saying this because it's cloudy outside, but also this looming cloud over stablecoin.
I think everyone's just waiting to see what exactly the report suggests, right? We've had reporting that says the government might try to treat stablecoin issuers as bank-like entities, so similar regulation and oversight as if a stablecoin issuer is a bank. But we don't know for sure what exactly that is or how it's going to look like. What we do know is that, reportedly, it's the Treasury Department and the Biden government want Congress to enact a law that would make this happen. So, even if this report does come out, this week, it's still going to take some time for Congress to wrap its head around it and draft a bill and pass the bill. And that's assuming it's passed at all. So, yeah.
And it won't just affect stablecoins; it'll also affect the exchanges that trade stablecoins in terms of potentially in terms of how they treat them. Correct? That's what we could see.
Yeah, exactly. If it turns out that stablecoins are going to be treated as securities, then Gary Gensler's having a field day. He'll finally have full-blown congressional authorization to regulate exchanges like Coinbase, which he said should register already. If it is treated as a bank-like entity, or stablecoin issuers are treated like banks, then I'm not wholly familiar with the specific oversight and regulation that this will result in. But yeah, it's going to result in some kind of supervision and close eye on exchanges by maybe the banking regulators like the OCC.
All right, we'll be awaiting that report. Thanks, Nick, for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Coming up, we'll be checking in on Asia with our daily forecast. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, October 26th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, the Philippines has a huge overseas population, many of whom struggle to vote, but could blockchain voting offer the solution? We're going to take a look at that story, the hurdles such an ambitious project needs to overcome, and a whole lot more coming up. Let's get you up to speed from Asia to the world. First up, the Philippines is looking into blockchain voting with an eye on rolling it out by 2025. However, one of the companies pitching to be involved in the project is Votes, an American startup that has had some mixed success with some minor state elections in the U.S. But is the promise of blockchain voting too good to ignore? Forecast News' Regina Lay has more from the Philippines.
The Philippines has begun mock trials of blockchain voting with the express goal of convincing more of the 7 to 10 million Filipinos working overseas to exercise their rights. The Philippine Commission on Elections, or COMELEC, told Forecast News it doesn't matter who you ask.
Voters always say that the low voter turnout is primarily because it is such a hassle for them to go to the embassies and consulates just to vote.
And governments around the world, including in the US, are also looking at whether blockchain can stamp out voter fraud. The biggest selling point of blockchain voting is its immutability, wherein votes recorded on the chain are very difficult to alter. Votes CEO Nimit Sani told Forecast News what that means.
Once something is written, it cannot be tampered with very easily, which means even if someone's a system administrator, someone's a government, someone has full access to the system, it's written in a manner that it can't be changed.
But blockchain voting has its critics. The Massachusetts Institute of Technology put out a report identifying a string of vulnerabilities in the app built by Votes. However, COMELEC remains confident that the safeguards are adequate.
Once a vulnerability is exposed in this industry, people waste no time patching those vulnerabilities. So yes, we admit that, when a technology is new, there will be vulnerabilities, but this does not mean that the industry remains stagnant.
Jimenez says the target for rollout is the 2025 elections. For Forecast News, I'm Regina Lay, Manila, the Philippines.
Meanwhile, from tourism to crypto mining, Australia's Byron Bay may be best known locally as a tourist hotspot that's home to many Hollywood A-list celebrities. But could it be the next crypto mining hotspot too? The coastal town is set to host the country's biggest Bitcoin mining operation, 100% powered by renewable electricity. Forecast News' Lachlan Keller has more on what it means for the pool. The global mining pool, that is, from Melbourne, Australia.
Mawson Infrastructure Group has struck a deal with leading renewable energy firm Quinbrook Infrastructure Partners to build crypto mines across Australia. The first of those, in Byron Bay, is set to come online this week and is expected to add 0.4 exahashes to the global mining pool. According to data from the Cambridge Centre for Alternative Finance, Australia currently accounts for 0.19% of the current global hash rate. However, this may be set to increase as many of the recommendations in the recent Australian Senate review on fintech seek to boost the local crypto industry. One of those recommendations is a 10% tax break for mining operations using 100% renewable energy. For Forecast News, I'm Lachlan Keller from Melbourne, Australia.
And finally today, amid a backdrop of criticism from Chinese state media over NFTs, there's been some subtle rebranding. Alipay, the mobile payment app, which is ubiquitous in China, has actually changed the name of the NFT collections on its platform to Digital Collectibles. Alipay has actively rolled out NFT artworks built on its own ant chain. Just last month, it created NFTs featuring the torch of the 2022 Asian Games, which are to be held in Hangzhou, China. Meanwhile, Huanhe, an NFT app launched in August by Tencent, has also removed NFT references from that app. In a statement, Antchain said it conducts its business around digital collectibles in strict compliance with laws and regulations. And it goes on to say that it firmly opposes speculation around NFT products. We're going to be keeping a close watch for more rebranding to come. And that's the Daily Forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is currently trading at $62,504. Bitcoin is down about 0.7%, and the CoinDesk Ether price ETX index is at 4,200 ETH, making an advance of almost 2% over the past 24 hours. And the CoinDesk DFX, the new DeFi index, is at $680. DeFi is charging ahead almost 8% over the past 24 hours. All right, so Lawrence, I don't know about you, but we're taking a bit of a breather. There are some folks who still think that Bitcoin will reach 100,000 by the end of the year. I don't know about that, but what's your outlook?
My personal outlook is throw a dart on a board and eventually it'll hit the price. And that's something I've always said, is that Bitcoin is still a volatile asset. So yes, at some point we'll hit we might hit that $100,000 mark at some point. Might not be today. It's not going to be at the end of the year. It could be the end of next year. It could be whatever. And it could also go down substantially from here. That's the nature of a volatile asset, and Bitcoin is synonymous with volatility. What makes this interesting now, and this is a crucial point, is that over the past several years we've talked about, if only we had an ETF. If only we had an ETF. Once we get an ETF, everything will be wonderful. Unicorns will fly out of the air and jump on rainbows, and it'll be phenomenal. And Bitcoin will go to $1 gazillion. And we'll all be driving Lambos and what have you. That's like not exactly the case, right? Because first of all, the ETF we're getting isn't a spot ETF, and I know people are saying, oh well, it doesn't matter effectively, but it kind of does, because it's a bet on the futures market of Bitcoin. And there are all sorts of, as I mentioned before, there are all sorts of regulations as to what you can put your money in a Bitcoin ETF in the futures market. You can't, and how many contracts you can hold. So this is kind of like a weird situation right now. And unfortunately, if people start to see that the ETF doesn't generate the kind of interest that they expected, that this thing won't go to the moon right away. I don't know. It might be something.
The ProShares ETF is one that came out second for the in the history of ETFs in terms of volume, in terms of assets trading. So that's a huge success, and it's just a Bitcoin futures ETF. If there were to be a spot ETF, if Canada is any indication, the market for something that closely tracks the movement of Bitcoin would be in huge demand, far greater than what a Bitcoin futures ETF can hold. And we already see that GBTC, the biggest fund out there for Bitcoin, counts for about 3% of the Bitcoin out there. They're trying to convert to a spot ETF. And it seems that we've had guests on say it's a crawl, walk, run approach that the regulators at the SEC are taking toward introducing ETPs, electronic traded funds into the market. And so if this Bitcoin futures seems not, susceptible to too much market manipulation, perhaps they'd be more comfortable with allowing Bitcoin spot to flourish as an ETF.
Emily, what's your bet?
Well, I think that the ETF is performing. Yeah, I think the ETF is performing, as well as could be expected. When you look at all the other things that are happening in the world, for example, China basically shutting down its crypto market, and we still have Bitcoin surging to an all-time high, it seems pretty clear that this is a result of the ETF. So when you take in the other factors outside of the United States, I think this performance is actually pretty striking.
Mm-hmm. Getting back to Christine, your point, don't you think, at least from my perspective, I'm looking at this and I'm seeing the sort of hesitation from Gensler's part. At least some of it has to do with this whole idea, as we were talking about with Nick before, is what is the status of stablecoins? And I think we're not going to get that spot ETF until then. I mean, you think this is absurd?
We also heard he's expressed some language signaling that perhaps he will need more authority from Congress to move ahead with allowing and being able to oversee or rather approve Bitcoin spot ETF. So there's a sense that there needs to be some collaboration or approval from Congress to get that underway, and he doesn't want to overstep any of his authority, it seems. All right. With that, let's have a look at our spotlight guest.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right. Well, have you seen the cover of The Economist lately? I actually have it right here. But we are selling our cover as an NFT, it says, with a photo of Alice in Wonderland, as well as the white rabbit peering down the rabbit hole, a popular allegory in the crypto world, of course, for the puzzling, incredible, and absorbing world of digital currencies. The auction ends today. And joining us now with more is the Economist reporter behind the story, Alice Fulwood. Welcome to the show, Alice. So in March, the New York Times also put out an article called Buy This Column on the Blockchain, which sold for a whopping $560,000, all proceeds going to charity. You're also using the same NFT platform Foundation for the auction. So is this a similar experiment, or how is this different?
Yeah, I think it is kind of similar in lots of ways. Obviously, we're both media organizations. We are both selling on the same platform. The reason I chose Foundation in the end, I looked at lots of different platforms like OpenSea and Rarible and Super Rare and all of these ones. And I found that Foundation sort of made it easiest to issue the type of token that I wanted, the ERC 721. So that's why I sort of ultimately went with that platform. But it is an experiment. We are sort of seeing how much we can raise, seeing how the technology works, and sort of using that as a tool to inform our readers about how NFTs work.
So, Alice, you went through the struggle of building an NFT and putting it to market and an auction. But what does it tell us about media in general and journalism? I mean, have you picked up any great insights as to what this will change for the industry that we're in?
So one of the reasons that I was sort of keen to potentially issue this as an NFT is that I think the discussion around the sort of decentralized Web3, as sort of a lot of developers call it, as I was exploring my piece that I wrote about DeFi, was really interesting as a sort of new way of distributing digital media in a web situation that isn't necessarily dominated exclusively by tech firms. And so this was my attempt as a media organization to experiment with this sort of new way of distributing media via a decentralized web rather than, the web channels that we currently use. And it's been, really interesting. There are definitely some benefits to doing it this way, but I found that there are also some costs, paying the gas fees, the emissions that might be associated with the NFT. So pros and cons of this new system is my takeaway.
Yeah, actually, could you tell us a little bit more about the experience of creating an NFT and some of the challenges you encountered? You mentioned gas fees, but was there anything else?
Yeah, so I grouped my challenges into two bundles. One were the internal ones. I had to get our legal, our treasury, our tax teams all to feel comfortable with what we were doing. And there's very little guidance from governments on whether, for instance, you have to pay indirect taxes or sales taxes on NFTs. So we had to sort of resolve how we were going to manage that risk internally. And then externally, there was the choice of platform, which actually was quite a difficult question to answer. It ultimately came down to that token type, which is quite a technical question that I had to learn about before I felt like we could proceed. And then the literal steps to issue it, things like, I have to hold the private keys to the Economist Group's wallet to issue this NFT. And that is sort of quite a powerful and scary position to be in as a correspondent. And so, being that person came with a lot of responsibility. That is a new challenge. Usually I just write text for the paper.
I wonder if you could tell us more about the process of making an NFT. Was it very intuitive or was it quite challenging?
I think once you have decided to use a platform like Foundation, they make it very, very easy. So all I had to do was upload an image, write my description, the name of the NFT. You then have to do a transaction using a crypto wallet. I use MetaMask, and you sort of sign that transaction, and it's all within the interface of the browser. So those sort of literal steps are quite easy, but obviously knowing that you need a wallet, putting funds in that wallet, and deciding which wallet to use are all sort of big questions, and deciding which platform to use and playing around with lots of them was a lot of work. Ultimately, each platform tries to make it as easy and intuitive as possible for their users, but knowing that you're doing the right thing took a lot of research.
So after going through all of this, do you feel that we're going to hit a point where we're going to be trading intellectual property rights the way we trade, say, stocks or cryptocurrencies or commodities and things like that? Do you think we're going to get to that point anytime soon, or is that just sort of after having just gone through this simple process, I looked at it and said, who wants to go through this?
I mean, there was a Harris poll that found that 11% of Americans owned some sort of NFT or digital collectible already. It is the hurdle to buy one of these things seems quite high. We tried to explain it to our readers, but I don't think that a lot of the people who've been reading The Economist for 50 years are going to be equipped to necessarily engage with that technology. So there definitely are hurdles. A lot of people do it already. And there are really interesting experiments. They're kind of nascent at the moment with doing the tokenization of everything like real estate or other assets. And one of the sort of interesting features of NFTs is that you could technically include sort of anything in the data that is ultimately becomes that NFT. So they could be used for anything, and it certainly seems like a really interesting space to watch.
Alice, just turning away from the NFT for a second and to the article itself, which was really extensive and a really good look at DeFi. What are some of the challenges you find about just covering this industry or covering DeFi?
I mean, the biggest sort of initial one is just that the jargon is very off-putting or sort of terrible. You have to introduce so many terms to a reader to get them to understand and follow along with what you're saying, that it really can be quite a high hurdle to saying meaningful things very easily. That's why I think we ultimately decided, to do such a big take on it that would allow us to have the space to explain sort of lots of different elements of the DeFi world to people. And there's also a sort of a challenge, which we ultimately, thought it was best to use sort of metaphors to describe. But there's a challenge explaining quite all of the impact that blockchain technology and decentralized finance could have, because it is, an entirely different world than the one that we live in now. And so there are lots and lots of different aspects that you have to consider when you're writing about it. And, it really is impossible to cover everything that's interesting. So yeah, the jargon is a lot, and explaining this sort of immersive world was also quite difficult.
All right. Well, the NFT auction ends today. It's here on The Economist, Down the Rabbit Hole, The Promise and Perils of Decentralized Finance. Alice, thank you so much for joining us.
Yes, thank you for going through the looking glass, Alice.
Yes.
Thank you so much for having me.
That was Economist reporter Alice Fulwood. And that's it for First Mover. Thank you, Emily Parker. Thank you, Lawrence Lewitton. I'm your host, Christine Lee. And I'll be back live at 3 p.m. with All That Bitcoin. Be sure to check out those folks on the Hash at noon. You're watching CoinDesk TV.